Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Megan Brantley, the Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday is right. We're talking music. We're talking Spotify. The stock, as I mentioned before the break, hit an all-time low. And I looked at the last quarter's numbers. They were pretty good. Monthly active users were up 20% year over year, but the stock's been pummeled. What kind of data do you guys have on LikeFolio? Is it anything positive?
Yeah, so, we have a fun segment for you guys today, and this may be shocking, but you know whose idea it was to dive into Taylor Swift?
Oh.
It wasn't my idea. It wasn't any of the ladies in the office idea. It was Andy Swan's idea. So he is our chief Swiftie, but he's right, because this event, especially her most recent album drop, was a big bellwether event. It essentially broke the Billboard charts. It broke a lot of streaming platforms. And this is a time, especially at a large event like this, where consumers really tip their hand, and it gives us a really large sample size to dive in and say, okay, which platforms do consumers prefer, and where do they turn when they want to consume? And overwhelmingly, in the mentions that we analyzed, most consumers were turning to Spotify. And so, I think that this just reinforces, Spotify overall does hold market share in this music streaming space. But for us, this was a good time to take a look because, as you mentioned, shares are trading at all-time lows. And so we thought, okay, what is, if there is any, a case for Spotify? What does Spotify need to do to reverse its situation? And the first thing that we thought is, one of the things that it's trying to do is build this audio ecosystem. This almost reminds me of what Square was trying to do a couple of years ago, and what they have done pretty effectively. But what Spotify wants to do is say, okay, we want users to come to us when they want to consume any type of thing. So any type of audio content, beyond just a Taylor Swift. And so they're doing this with podcasts, and we see continued traction in podcast listening mentions. I think those were up by about 7% year over year. So, we see Spotify executing well here. And we also see Spotify executing well in this new expanded audiobook segment that it's just launched. And so we're starting to see Spotify, make these moves to improve its user experience, to expand its offerings to users. And what all of this does is really make those subscribers more sticky. And we know that, the subscribers, especially these premium subscribers, this is what really drives that revenue growth for Spotify. And so, so far in our data, we're starting to see things more positively, where you can see here, these are the overall happiness levels, this change in happiness. And, Spotify, one of the reasons that it was dinged is because it's operating losses, how much it's spending to retain these consumers, and the investments that it's making in its own platform is really dinging its profitability. But we can see that it is making progress in providing a better user experience, more so than any of its other streaming competitors, with happiness up 7% year over year. That's pretty significant. And this is already one of the largest players in our universe. So whenever we see these really high and improving levels of happiness, especially among a very large sample size, this is one of our best kind of long-term indicators of future growth.
Megan, Tom mentioned at the beginning of the segment that Spotify's trading at or near all-time lows, and that is despite its 39% below its IPO price, despite doubling revenue since then and doubling monthly active users. Now, I'm going to say something that our viewers might agree with or might not agree with, but you can't deny it. No one spends more money now on music than they did 10 or 20 years ago. No one. Music, as the price of everything's going up, the price of listening to music has never been cheaper. Why am I saying that? Because Apple Music just raised their prices. Spotify has room to significantly raise the prices of this service and still keep customers and still grow customers, as they are still growing. Don't you think that this stock has been punished because, like you mentioned, it doesn't make money. It spends more than it brings in. It doesn't make money. But they could afford to charge a lot more for this product than they currently do, Megan.
Yeah, I think that that's a really good point, and that's one thing that we look at, especially whenever we talk about these happiness levels, is because these really high and rising levels of happiness suggest to us a really sticky consumer. So a consumer is less likely to switch over to another platform. There's also a barrier to switching. One of the things that Spotify has done really well is personalizing its user experience. So, once you are in its environment, it's really difficult to make that switch out because it already knows what you like. It knows what songs you want to listen to. It knows kind of what to present to you. So I think this is another one of those, pros for pricing power and if Spotify does increase its pricing, I think that would be really well received by investors. So it's kind of a unique opportunity. A lot of times we look for these divergence plays in our universe. We talk about this a lot, and we look at, okay, what does overall consumer demand look like and how are consumers engaging with this platform? And we're starting to see some traction there. Overall purchase intent mentioned, so for us, that's either downloading or listening to Spotify, is rising in this current quarter at a pretty nice clip. I think that this, kind of bucks a little bit of a muted engagement that we saw, following the pandemic when everyone was inside and, listening to and just consuming content at such a high level. And so we're starting to see improvements. We're seeing not only just improvements in demand, but in happiness levels. So again, I think this kind of adds to that theory of Spotify does have pricing power, and it could be sitting in a really nice position heading into the next year.
Yeah, Megan, this is what I love about what you guys bring from LikeFolio, the fact that they already had earnings. The stock fell from 97 down to 84 the day after earnings. It's hitting those all-time lows today. But, this is one of those stocks I wouldn't talk about because the earnings are past. I probably wouldn't even have looked at it and noticed it. So you guys bringing us this. But I wanted to talk about the consumer purchase intent mentions where you're consolidated, maybe trending a little bit higher. The stock price continues to underperform on some of those levels. From that versus what you guys are seeing as far as purchase intent mentions. Is this the reason you guys are bringing this to us, that maybe you think it's that opportunity?
Yeah, this is one that really caught our attention because we're starting to see that demand growth. So we see the consumer behaving one way and we see the stock behaving a totally different way. And another interesting fact that kind of builds to this, so you can see those mentions, that demand right there, up 15% quarter over quarter, up 1% year over year. I think we created this chart yesterday just to give you an idea of the acceleration today. I believe that year over year change is up 3%. So it's gaining steam in a positive direction while the stock falls. So this is one of those times when we like to take a critical look to say, okay, what is it doing right? How are the consumers reacting to it? And we see one thing that's driving a lot of this growth are these new avenues that it's exploring. So things like podcasts and things like these audiobooks, which have much better margins than, say, its music business. So this is kind of another positive thing that when you look at specifically what is driving this demand growth, it's areas that could help to improve Spotify's profitability.
Yeah, and Megan, earnings are past. Do you guys still have a score? Or is it getting pretty positive now with the stock at these levels?
It is improving. We're still technically neutral, but it's one of those things where, our score doesn't necessarily take into account the stock price. So I think that that's something that we have to consider as we look at a name that has a pretty neutral but improving score and is, looking like a much better valuation for long-term investors.
Yeah, and, I thought you were going to say Jenny Horn brought this to you because she was on Spotify at midnight listening to Taylor Swift. I guess the platform broke down at one point because so many people were listening. But thanks for the data, as always, Megan. Great stuff.
Yeah, thanks, guys. Enjoy the rest of your day.
Have a great weekend. That's Megan Brantley, Vice President of Research at LikeFolio, helping us break down the improving data here, Kevin, on Spotify.